Good morning, one and all present here. Today, what we are going to see is about amalgamation. You would have known the meaning of the term amalgamation, but now we are going to see what is the meaning of the term amalgamation in the context of corporate accounting. When two or more existing companies combine together to form a new company, it is known as amalgamation. All the combining companies are liquidated and a new company is formed. That is, what it means is two or more existing companies which are doing business now, they will join together and they will create a new company. That company will carry on the business in days to come, right? When, for example, A and B companies are presently existing companies and they two companies join together to form a company called C. That company is called as newly formed company and this process is called as amalgamation. When in case of amalgamation, first of all, there will be a selling company and one will be a purchasing company, right? Selling company means the company which join together, right? And purchasing company is called as a newly formed company which is being formed for the purpose of taking over the assets of already existing companies, right? Whenever there is a purchase and sale, there should be a transaction of money, right? That is called here as purchase consideration. So there are different ways of calculating purchase consideration. We will see we will list what are they. First one is lump sum method, next one is net payment method and net asset method, and last one is intrinsic value method. By employing any or one of these method or all the four, you can calculate the purchase consideration depending upon the data given in your problem, right? While calculating the purchase consideration should consist or should include only the amount which is to be payable to the shareholders alone. Here, the amount which is going to be given to the debenture holders or creditors of selling company should not be included in purchase consideration, right? So the debenture holders and creditors will be settled out, and that amount which has been given to the debenture holders and creditors will not be included in the purchase consideration, and the purchase consideration will consist the full amount which is going to be paid to the shareholders of that company, right? In this case, first of all, we have to post entries, then you have to prepare accounts, ledger accounts. Okay, now in detail we will see what are the journal entries to be passed in the books of vendor company. Vendor is nothing but selling company, right? So for first entry, nearly there are 13 entries to be passed in the books of vendor company. First entry is for assets, for transfer of assets taken over. Transfer of assets taken over means the assets which are taken over by the purchasing company. So here what you have to post is, for example, in your balance sheet there are given as fixed assets, debtors, cash and lot more. Okay, in that what assets are taken over by the purchasing company alone should be posted here. So here the entry to be at realization account data to various assets account. I have given it as at book value. Book value means the value which is given in your balance sheet, right? The balance sheet, the problem, right? Not in adjustment. The asset values which is given in the balance sheet of a company, that value should be posted here, right? To various assets, I have given as various assets means you will have split ups, fixed assets, current asset, stock, creditors, bills receivable, like these many more will be present in your fixed asset side. So what are the assets which is being taken over by the purchasing company should be posted here, right? So this entry will be first one, that is whenever there is a transfer of asset, this entry is to be passed, that is realization account data to various assets account. And the narration for this is what is happening here, the assets are being transferred, right? So your narration is being assets transferred, right? Are you clear? And the next entry is for transferring the liabilities taken over. The selling company, that is the vendor company, will also have the liabilities to be paid, right? That liabilities will also be taken over by the purchasing company, right? So for that aspect, you have to post entries. What liabilities are taken over by the purchasing company? For that case, you have to pass this entry, that is various liabilities taken account data to various liabilities account data to realization account. I have given it as various liabilities, it is not correct. The entry to be various liabilities account data to realization account. Here also the values to be posted here is at book value. So the narration for this entry is all the asset which has been all the liabilities which are accepted to be taken over by the purchasing company, they have to be present here, and the narration to be given as being liabilities transferred. Clear? And for third entry, when the assets are taken over and liabilities are taken over, in that case the purchase consideration has to be paid by the purchasing company to the selling company. So for that we have to post entry. What is the entry is purchasing company account data to realization account, right? Purchasing company, in the place of purchasing company, in your problem, what is the name of the purchasing company given, that has to be written here. So purchasing company account data to realization account, right? This is, I am saying this as a due entry means here the amount will not be transferred. You are simply saying that this much of amount is to be given as purchase consideration to the selling company by the purchasing company, right? Then fourth entry is receipt of purchase consideration. Here purchase consideration is received in what forms? Already we have seen purchase consideration can be in any form. It can be in shares, debentures or bank, right? So here purchase consideration comes in what way? If it comes in equity shares, that has to be posted here. Preference shares means preference shares, cash means cash. Who gives it? To the purchasing company, right? So your entry to be equity shares account data. So that is equity shares in purchasing company account data, preference shares in purchasing company account data, debentures in purchasing company, and bank from your purchasing company to the purchasing company account. This is the entry, right? Then for example, there are 14 assets in your balance sheet, that is selling company's balance sheet. Only 8 assets are taken over. The remaining assets are not taken over by the purchasing company. In that case, what the selling company will do is, the selling company has to realize by it the asset which has not been taken over by itself. So what will happen is, the selling company itself will receive cash by way of selling the assets which is not been taken over by the purchasing company. So for example, a particular asset called fixed asset is there. Its book value is around 2 lakhs. Here the purchasing company will purchase that asset only for 1,80,000, means it is less than the book value. So there is a loss. In that case, what the entry to be is bank account data, realization account data to particular asset. In the place of particular asset, you have to write it as to fixed assets account. Okay, when there is a loss means you will be receiving, you will be posting only this, what it is, bank account data means the cash you receive, and what loss you have incurred is in the place of realization account data to particular asset. This is the case. If it is opposite, that is, by selling that fixed assets your company makes a profit of 20,000 means, that is, your book value is 2 lakh and you are selling that fixed assets to 2 lakh 20,000 means, what will be your entry is bank account data to particular asset account data to realization account data. Why it is, you have made that asset in a profitable sale. So that entry to be is bank account data to particular asset account data to realization account data. Right? What is happening here? The asset which has not been taken over by the purchasing company is itself sold by the selling company, and the amount are realized by the selling company itself. For this you have to post the entry, that is this entry number 5. And what is entry number 6 is, like the asset also, liabilities will also not be taken over by the purchasing company, right? In that case, the vendor company has to pay that liability by itself. Okay, for example, there is a creditor in your liability side. He has to be paid on the same 2 lakh, right? Here, that 2 lakh amount will be paid by the selling company itself. In that case, there may be also premium as well as discount. Okay, for example, if you want to pay 2 lakhs to the creditors, but actually you are paying only 1,40,000, right? So you have enjoyed the discount, right? So in that case, what will be your entry means particular liability account data to bank account to realization account, right? It is opposite. What it is, instead of 2 lakh you are paying 2 lakh 20,000 means your entry will be particular liability account data, realization account data to bank account. That 20,000 has to be paid, posted in debit side of the realization, right? This is the case. Then this entry is to be posted when the liabilities present in your selling company is not being taken over by the purchasing company. In that situation, this entry is to be posted in the books of vendor company. Clear? And next entry to be posted in the books of vendor company is for meeting the liquidation expenses, right? For carrying out the liquidation, there will be some expenses. So this expenses is to be borne by the selling company or either by the purchasing company, right? Here, if the expenses are borne by the selling company, then the entry to you have to post is realization account data to bank account. This information will be present in the adjustment portion. Okay, how much the company has paid the liquidation expenses, who has paid, either the selling company bears or the purchasing company is going to bear. That and all matters will be present in your adjustment aspect of your problem. And when you see that what an amount has been given as liquidation expenses, that amount is to be posted here. Clear? Then if the expenses is to be borne by the purchasing company, in that case what the entry will be, purchasing company account data to bank account. That is, for example, if it has been paid, right? If what is given in your problem is, now you make a payment, later I will pay you. I in the sense the purchasing company will pay you. This is a statement. Reimburse, right? This terminology is present means you have to post the entry as bank account data to purchasing company account. Okay, what entry you will post in case of reimbursement of liquidation expenses? In that case, bank account data to purchasing company. This entry will be posted when means in your adjustment it is given as the purchasing company, the selling company will meet an expenses of 2000 as liquidation. Later it can reimburse by the purchasing company. Like all these, it has been given means what entry you have to post is bank account data to purchasing company account data. Sorry, account. Clear? And last cases already when I have said as purchase consideration should consist only the value which is being paid to shareholders. No. So here the debenture holders which are present in selling company, they are also supposed to be settled. So here they are being settled. So how, what the entry will be present is debentures account data to debenture holders account, right? This is the due entry, right? Here I have given as realization in debit side also, and credit also realization is present, right? For the same thing, when you are additionally paying the debenture holders, in that case premium will come, then the entry will be debenture account data, realization account data to debenture holders. When you are paying less than what it is to be given to the debenture holders, then there is a discount. In such case, the entry to be posted as debenture account data to debenture holders account and to realization account. What an amount you have given as less, that has to be posted in to realization. Clear? This entry is to be posted as a due. Clear? Then a debenture holder payment entry, settlement entry is being made. Debenture holders will receive the cash. So debenture holders account data to bank account if cash is paid to debenture holders. Other way, the debenture holders will also be paid debentures from the purchasing company, right? If the debenture holders are settled by giving new debentures from the purchasing company, then your entry will be debenture holders account data to debentures in purchasing company. So what you have to see is what the situation arises or given in your sum. If debenture holders are paid in the form of cash, means cash will be paid, right? Then the entry will be debenture holders account data to bank account. Otherwise, if the debentures are settled by the debentures from new company, means that is your purchasing company, means what entry to be is debenture holders account data to debentures in purchasing company account, right? Here what happens is, like all liabilities, that is creditors, bank, OD and all, here debenture holders are also settled by the purchasing company. Clear? Then if there is preference share capital which is to be paid by the selling company, then what entry that company has to post means preference share capital account data, base entry is preference share capital account data to preference shareholders account. This is the base entry. Here that preference shareholders may be settled at premium or at discount, whatever may be the situation, then the concerned entry has to be posted. If it is paid at premium, means the entry will be preference share capital account data, realization account data to preference shareholders. Clear? If the same preference shareholders are settled at discount, means then the entry to be as preference share capital account data to preference shareholders account and to realization account. This to be the entry when the preference shareholders are settled at discount, right? So this is not a permanent entry. Depending upon the situation or the happening which is given in the problem, likewise you have to post the entry. Clear? For that, the entry which is being given as 9A is due entry. Here only the settlement has been done, right? Here also the preference shareholders may receive cash or shares from the purchasing company. Whatever they are receiving, accordingly the entry will be posted. For example, if cash is paid, then the entry will be preference shareholders account data to bank account. Else, the purchasing company is paying the preference shareholders preference shares from a new company, means then the entry will be preference shareholders account data to shares in purchasing company. So what you have to see is how the preference shareholders are settled. What is the sentence given in your sum? Accordingly, you have to choose the entry. This is the base entry, right? The 10th entry, what you have to do is, apart from assets, liabilities, capital, there will be accumulated profit which will be present in your company's balance sheet in the liability side. All these items will be present only on the liability side of the share cap of the balance sheet, right? So all this has to be transferred to equity shareholders. Why here equity shareholders comes means assets are taken over. If it is not taken over, it has been sold, and liabilities are settled. If liabilities are not taken over, that liabilities are realized by and settled. Clear? Likewise, debenture holders are settled, preference shareholders are settled. Apart from them, the only person who is left over is equity shareholders. So this equity shareholders has to receive something. So what happens here is equity shareholders and the accumulated profit, whichever been left over, has to be transferred to the equity shareholders. So in such case, the entry to be as equity share capital account data, general reserve account data, profit and loss account data, and any other reserve, whatever be the name given. So I have given as any other reserve which has been present in the liability side of your balance sheet, that all should be transferred to the equity shareholders who are the real owners of the company, right? So for transferring the equity share capital and accumulated profit, this entry is to be posted. There will also be accumulated losses. This accumulated losses will be present on the asset side of the balance sheet. So this accumulated losses should also be transferred to equity shareholders. Then in such case, what will be the entry? Equity shareholders account data to profit and loss account to preliminary expenses to discount on issue of shares, right? These three items will be present on the asset side of the balance sheet. These three things should also be transferred to equity shareholders. These three are commonly called as accumulated losses. Clear? So whenever you want to transfer the accumulated losses to the equity shareholders, the entry to be is equity shareholders account data to profit and loss account to preliminary expenses account and to discount on issue of shares. Clear? These three to be transferred to equity shareholders. Right. All these things are happened. Now you want to know whether there is a profit on this transactions all and all. So you have sold assets, yeah, assets are taken over, liabilities are taken over, consideration you have received, and the asset which is not been taken over is also been realized, liability which is to be paid, that has also been settled, debenture holders settled, preference shareholders settled, you have transferred the accumulated loss as well as accumulated profit to the equity shareholders. All things are over. Now you want to know that whether there is profit or loss on this realization, right? In such case, you have to open a realization account and you have to realization ledger is to be opened and concern entry to be posted, and you have to find whether there is profit or loss. If there is profit on realization, the entry to be realization account data to equity shareholders account. Else, if there is loss, the entry to be S, equity shareholders account data to realization account. Clear? This step will arise in the 6th or 7th entry itself, right? But when you start posting your entries, it will be present in the 12th, right? In normally, this entry will be posted when you work out the problems. This entry will come at the place of 7th or 6th place, okay? And everything is over, and you have found out whether there is a profit and loss on realization, and finally the equity shareholders are paid. In such case, what will be the entry? Equity shareholders account data to bank account, or to bank account and to shares in purchasing company. For example, equity shareholders are paid cash, right? In such case, the entry will be equity shareholders account data to bank account. If not, for purchase consideration, purchasing company is giving shares from new company to the selling company, means in such case the entry will be equity shareholders account data to shares in purchasing company account, right? Here, an important thing what you have to note is, if cash is paid means that cash, for example, when you are realizing, when you are settling your liability is not taken over, you have to pay cash. Or when you realize the assets not taken over, you will be receiving cash. And when you are paying your debenture holders or preference shareholders, there will be a transaction or movement of cash, right? In such case, what you have to do is, you have to open a cash account, okay? You have to open a cash ledger, and accordingly you have to post your entries, and you have to find the balance what has been present in that cash account. Whatever the balance you receive or you arrive, that balance should be paid to the equity shareholders in the form of cash. Clear? For that purpose only, I have given as, when cash is paid in purchase consideration and liquidation expenses paid, in such case, cash account has to be opened and find the balance in the cash account. That balance which we arrive has to be paid to the equity shareholders. This is the final entry which is being posted in the books of vendor company. Okay, thank you.